Welcome all of you to this online workshop, wherein today we will learn about earning money using dynamic live, the Daumantic method. Now, earlier in the webinar, you must have seen the different benefits of having this dynamic live, and you must have also seen there are some very unique intelligence at work in this dynamic live, which always make sure that in any given market condition, you get the right entries and right exits. Now, having said that, today in this session, we will learn things in a bit more detail. Wherein we'll see that when it comes to starting your trading, now how to go about your trading, now what are the points that you have to keep in mind, now what are you supposed to do. These are all the points that we are going to discuss here today. Now once you have subscribed for this dynamic live and once you got it installed, and when you look at this dynamic live, this is how it is going to look. Now as it is told in the webinar, it is a matter of just clicking on this favorites to select any of your favorite stock or index. Now once you have selected it, this is how it is going to look. And in this you can see there are two different charts that you are able to see. One on the right side we call it as the intra-week chart, and the one on the left side we call it as the intraday 3 chart. So there are two different charts. Now in both these charts you can see that there is this line, we call this line as the long signal. Now before we start understanding this, now how to use and when to buy, when to sell, all these points, now before that let us try to understand some three basic points here. Now these 3 points we will make use of it at the later part of the session today, but then it is very important. Now what are these 3 points? First thing you have to understand, the long signal has a character. It can change its color from red to green, from green to red. So whenever it turns green, it means it is telling you that the trend is up, the price trend is up now. And then similarly, whenever it tells you, whenever it turns red, it means it is telling you that the trend of the price movement is down. So just by looking at the color of the long signal, you will be able to understand whether the price is in an uptrend or in a downtrend. So if you're looking at the long signal in an intra-week chart, we call it as intra-week long signal. As of now, the intra-week long signal is in a clear downtrend. And then if you're looking at the long signal in intraday chart, we call it as intraday 3 long signal, and that is also in a downtrend as of now. Right? So this is the first thing. The second most important thing here is the zigzag cautions. You can see here there is a symbol, zigzag caution symbol. Now if it appears at the bottom of the price, it will be green in color. If it appears on top of the price, it will be red in color. Now whenever a zigzag caution appears, it means get ready, the price is about to reverse. Okay, and now you may have a question while you're trading there seems to be so many symbols. Now which one do we consider to be a zigzag symbol? In such a case, whenever you come across any symbol for that matter, whenever you come across any symbol for that matter, all that you have to do here is just come and read what's written in the reason. Because if it is a zigzag, it will be very clearly written here as ID3 zigzag. It means intraday 3 zigzag, or it will be written as intra-week zigzag. So wherever the zigzag appears, either in the intraday 3 chart or in the intra-week chart, it will be very clearly mentioned in the reason. Then you will know that this symbol is a zigzag caution. Right? So that is the way very easily you will be able to identify. Normally when a zigzag caution appears, we try to exit our trades very early. There are cases where we also avoid the trades, avoid entering into a trades when there is a zigzag caution. So there's a second thing. And third and most important thing, last thing here is the long signal edge point. You can see here the price was coming down. As the price kept on coming down, at some point it moved up and it came so very close to the long signal. Similarly, it came down once again and then it moved up. It almost touched the long signal. So these are the points. We call this as a long signal edge point. So whenever the price comes closer to the long signal, or even if the price touches the long signal, these are the points. We call them as long signal edge points. So when the price reaches a long signal edge points, there are chances it can reverse, isn't it? There are chances it can reverse. Just by looking at the price movement, you will be able to understand it. Now once again, I said even if it comes near to the long signal, or even if it touches, we call it as an edge point. Now some of you may have a question in your mind. Now when you say if it comes near, how near should it come to consider it to be as a long signal edge point. You don't have to worry that when the price is coming closer to the long signal, just keep a track of this reason here, because in the reason it will be very clearly mentioned as ID3 long signal edge or intra-week long signal edge. You can see here as of now it very clearly states that intra-week long signal edge. So it is referring to this particular edge point where the price came so very close to the long signal. So this long signal edge point also identifies the temporary price reversals. Normally we try to exit our trades there, and there are times where we avoid the trades also. So these are the three basic things. Now let us try to understand the concept here. Now how to start trading. Now what are you supposed to do, when to buy and when to sell? Now as it is told in the webinar, it is a matter of just 1, 2, 3 easy steps. The first step being, go select any of your favorite stock or index. Once you have done that, the second step is come and check this action information under the Dowmantic method level 2, and whatever the action information tells you, based on that, simply place orders, start trading and start earning. Okay, so for you to trade, there will be certain very clear instructions that you will come across here in the action earlier today. At this point in time, as the dynamic live felt that the price is decreasing, here it was very clearly written as buy put option now. So if it feels that the price is about to decrease further, then it will tell you buy put option now. Later it is now telling us hold put option. It means hold the put option that you have already bought. And then at some point here it will be written as exit put option now. So when it says exit put option now, that is when you can go ahead and exit the trade. So when to enter, how long to hold, and when to exit, complete information will be mentioned here. You just have to follow it. Similarly, yesterday at this point in time, it was very clearly mentioned as buy call option now. And later it said hold call option, and at some point today morning it said exit call option now. So that is where you could have exited somewhere close to this point. So this is how it gives you information. So all that you are supposed to do is whatever it tells you to do, just start trading. But then whenever it tells you to buy a call option or a put option, there's one more important thing that you have to do, and that is to learn how to select the right strike price. And today you don't have to worry, even the right strike price is automatically selected here. That is the automated strike price. So whenever it tells you to buy a call option, you can come look at this pyramid pointing down upward, and then you can pick one number out of these three that is mentioned here. Similarly, when it tells you to buy a put option, you can look at this pyramid pointing downward, pick one number out of these three, that is your right strike price. But then out of these three, which is the right strike price? When this is a question, you have to understand whenever you are trading in options, either in an index or in a stock. Now we have monthly contracts available for us to trade, monthly option contracts. So these are the option contracts which has 1 month validity. It expires on the last Thursday of every month. When you know that it has 1 month validity, now what you can do is you can split that month into 3 parts. The first part of the month you can call it as the beginning of the month. The second part you can call it as the middle of the month. And the third part you can call it as the end of the month. So in the beginning of the month, now how do you know whether you are in the beginning or at the middle or at the end? So for that, just look at the date. Today's date is 30th June 2020. So if you remember, the monthly contract, that is the June contract, expired on 25th June. So after that, from 26th onwards, we have the July contract available. So as of today, we are 30th June. It means we are in the beginning of the month, isn't it? So in the beginning of the month, if the action tells you to buy a call option or a put option, then you can trade only the OTM strike price. And in the middle of the month, if it tells you to buy a call option or a put option, you can trade the ATM strike price. And at the end of the month, if it tells you to buy a call option or a put option, you can trade the ITM strike price. Got it? So this is how you select the right strike price and simply go ahead and start trading. But then when it comes to trading in options, especially the index options like Nifty and Bank Nifty, now along with the monthly options, we also have weekly options available for us to trade. So when I say weekly options, these are the option contracts which has only 1 week validity. It starts on a Friday, it expires the very next week, Thursday. So when it has only 1 week validity, now what one can do here is you can in order to keep your trading very simple, without any confusion, without any fear and panic, if you want to trade peacefully throughout the year, it is better you trade only the ITM strike price throughout the week. So this is how one can trade. Over a period of experience, you will try to understand now when to go for a ATM or even a OTM, even in a weekly options. But then in the beginning, it is better you stick on to only the ITM strike price. So this is how you select the right strike price. So all that you do here is, whenever the action tells you buy call option now or buy put option now, first select your right strike price. Once you have selected the strike price, then just go ahead and do the trade. Right? So once you have bought a call option or a put option, later whenever it tells you to hold a call or hold a put option, it means simply hold your position, and at some point it will be very clearly written as exit call option now or exit put option now. That is when you can go ahead and exit your trade. So wait until it tells you to exit. You don't have to use your brains, you don't have to follow anything else. Just wait until it tells you to exit. That is when you can go ahead to do the trade. Now along with this, there is one more additional last point that you have to consider, and that is to secure your profits time and again, especially when you're trading in options. Now how to do that? I'll just give you a small example here. Now let us say at this point in time, now I have bought a put option, the 22,500 strike price put option. It said buy put option now. So I bought a put option at around I bought a 22,600 strike price put option. I bought it at 163 rupees. So after buying the put option, now if the price tomorrow starts going down, as the price starts decreasing, you will definitely come across a lot of symbols like these. You can see here there are so many symbols here, isn't it? Now these symbols are either a dynamic system caution or a DMBOTS. So similarly, if any symbol appears at the bottom, then I am supposed to secure my profits. Now how to secure my profits? Let me give you an example. Today I have bought a put option, 20,500 strike price put option at 163 rupees premium, and then as the price starts decreasing, let us say once it reaches somewhere close to this point, I am supposed to I saw a symbol there. Now I have to secure my profits. In order to secure my profits, now what can I do? For that, I will look at the put option that I have already bought. I bought it at 163 rupees. By the time the price comes down to this level, now the premium could have definitely increased somewhere close to 300 rupees. So I bought it at 163 rupees. Now it is trading at 300, and now a symbol has appeared, which means it is time for me to secure my profits. So in order to do that, what I'll do is first I will sell it off. I bought at 163, I sold it at let's say 300 rupees. So once I sell it off at 300 rupees, now I'm talking about literally 133 points profit in this particular trade. Plus my initial capital is also back. Apart from the initial capital, I also have 33 points profit in my hand. But then at that point in time, it is still telling me hold put option. So I'm supposed to secure my profit, isn't it? So whatever profit that I have got 133 points profit. I will go buy another strike price put option. Let us say I buy a 19,000 strike price put option, and I'll buy it at let's say a 40 rupees premium. So once I buy it at a 40 rupees premium, now what is happening is, out of 133 points profit that I have earned, I have reinvested 40 points. It means I still have 93 points profit left in my hand. Now this is the guaranteed, this is a secured profit. Because from here, if the price manages to reverse completely, the worst thing that can happen is the 40 rupees premium can become zero. But even if it becomes zero, I don't bother much, because I've already secured a major part of the profit. So this trade is not a minus trade for me. But instead, if the price manages to decrease even further, now in this case, what will happen is, even the put option that we bought at 40 rupees, now that will move beyond 100, 150 or 200, and we will be able to make more profits. So this is how we secure our profits. Any symbol appears in the intra-week chart, and if you are in a profit in the option trade, don't forget to secure your profit. And during this process we call it as shift over. Now what we do here is, we are holding to the same position. If it is a put option, we are still holding the put option. If it is a call option, we are still holding the call option. Only thing here is, we have shifted our position from one strike price to another strike price of the same option. Right? And when you're doing this, part of the profits can be reinvested, or part of your initial capital can be reinvested, so that some part of the profit is guaranteed, or at least the risk on capital is totally reduced by reinvesting part of the capital. So this is what you're supposed to do. So let me repeat this whole flow once again in a very simple word. Action tells you to buy a call option or a put option. Just select the right strike price and do the trade. Once you have done the trade, you come across any symbols and in these intra-week chart. Now these dynamic cautions will appear only in the intra-week chart. So if it appears there, then immediately shift over, secure your profits. And in order, when you are doing your when you secure your profits, remember, reinvest part of your profits or reinvest only part of your initial capital if the profit is very small. Got it? So this is how you shift over. Now once you shift over, wait until it tells you to exit put option. Now, as I was telling you, I have bought a put option at 163 rupees premium. The price starts decreasing tomorrow, let's say, and then there is a symbol here. So I shift over, that is, I exit the put option and I buy another put option at a 40 rupees premium. That's what I told you. And even if the price reverses, and by the time it tells me to exit the put option, when I exit it, maybe I have exited at a 20 rupees premium. So out of the 40 rupees that I had invested, at least 20 rupees I have got it back. So I already have a 93 points profit with in my hand, and plus the capital of 20 rupees is back. So it is literally 113 points profit which I have already secured. But if the price manages to decrease further, then I earn more profits. So this is how one can trade using this dynamic live Daumantic method. Now, once you start implementing it, now first decide what is your capital. Based on your capital, select a quality stock or an index and trade the same script for one entire month. When you do that, now what is going to happen here is, first of all, it is very easy compared to trading multiple stocks every day. We are all here only for one purpose, and that is to earn money. And today, as long as we keep it very simple, now earning also becomes so very easy. But then when you are implementing it over a period of time, or 1 month, when you mechanically implement it, then we expect you to earn a minimum of 10 to 15% returns at least per month. Got it? But then when you're implementing it over a period of 1 month, you will come across a lot of trades during the month. In all these trades, you will start seeing results like gain, gain, minus, minus, gain, gain, minus, gain, gain. Or it may start off like minus, 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 gain, gain, minus, minus, gain, gain, gain. Whatever it, whichever way it moves, just make sure that you implement it for one entire month. When you do that, eventually you will end up with profits here. But then when you're implementing there are people, when they see a couple of minus trade, they panic. So when you panic, then what will happen is you will stop trading, you will go do something else, you will start using your own ideas. Then finally, one or the other way, you will end up winding up the whole capital. So the right thing to do here is, along with whatever I have just told you, along with that, just follow a discipline called as money management. Now, what is money management? Now, money management is a very simple concept. Now, all that you have to do here is decide what is your capital. Whatever is your capital, you can utilize only 10% of your capital per trade. So at this point, if I had to buy a put option at 163 rupees premium, now I am talking about an investment of literally close to 3,260 rupees investment per lot, because 163 into 20 comes up to 3,260 rupees investment per lot. But let us say I have a lakh rupees capital, so I'll utilize only 10% of it, which is the 10,000 rupees. So I have come here to do this trade with the 10,000 rupees allocation, but the investment required per lot is only 3,266. So in this case, with the 10,000 allocation, I will be able to trade three lots, isn't it? So this is how discipline is maintained here. So don't blindly increase your lot size or decrease your lot size as and when you want it. But then if you follow this procedure, eventually you'll end up with a handsome profit at the end of the month. Got it? So this is all that you're going to do. But then once you start implementing it over a period of 1 month, you will start realizing that earning 10-15% returns every month has now become a habit. Now, once it becomes a habit over a period of time, you'll start also thinking that is there anything more that I can do to earn more profits? In order to do that, let me tell you, dynamic live can be used in multiple ways. Very advanced trading concepts can also be implemented using the same dynamic live, which can help us earn some huge returns. But then today we are going to discuss only about the Daumantic method and level 2, which has another 2 more steps which can help you increase your profits. Now, what are the other 2 steps, especially the second step? Now, whatever you learned in the first step, if you have understood it very clearly, then we can move on to the second step, because it is just an addition, a simple point that has to be added to the first step, that is the Daumantic method. Now you will understand the second one. Now, all that we do here is, whenever it tells us to buy a call option or a put option, before we do the trade, we check intraday 3 long and we check intra-week long signal also. Got it? So what do we check here? So earlier at this point in time, it said buy put option. Now when it said buy put option, we checked intraday 3 long signal, it was red in color. We checked intra-week long signal, that was also red in color. It means both the long signals are telling you that the price, the trend is down. In a downtrend, you're planning to buy a put option. Now your trade is the right way to trade, that is the best way to trade, because you're planning to buy a put option in favor of the trade. Trend. The trend is also down and you buy a put option and the price goes down, then you make more money. Got it? So this is one thing. But then there is the other case wherein at this point it was very clearly written as buy call option now. So when it said buy call option now, we checked intraday 3 long, it was red in color. We checked intra-week long, that was also red in color. So when both of them are telling you that the trend is down, then you're planning to buy a call option. So your trade is against the trend, isn't it? In a downtrend, you're planning to buy a call option, so you're trying to go against the trend. So whenever you try to do the trade against the trend, then you have to be a bit extra careful. Now, in order to do that, now what you're supposed to do here is, now whichever script that you're trading, go check some other script which can have a direct impact on the script that you are trading. So if you're trading in Bank Nifty, then you can immediately go check what's happening in Nifty. Right? So what do we check in Nifty? Now, only thing that we are going to check in Nifty is, now whenever the Bank Nifty here said Daumantic method said buy call option, now since the trade is against the trend, we go check what is happening in Nifty. And in Nifty at the same time, if there is any zigzag caution on top, or if the price touches any long signal edge point, then we will avoid the trade in Bank Nifty. See, we are looking at Nifty and we are saying, is there a zigzag or a long signal edge point in Nifty? If any one of these two is there, then we avoid the trade in Bank Nifty. But if there is no zigzag, if there is no long signal edge point, in that case, even if your trade is against the trend, you can still go ahead and do the trade. Got it? So this is all that we do in the second step. But then yesterday at this point in time, it said buy call option. Now we saw that the trade was against the trend. Now what was the time and price of this? It was at around 13 hours, 1 o'clock in the afternoon, June 29th. So exactly at 1 o'clock in the afternoon, what was happening in Nifty? Let us go check. So here is a case of Nifty. You can see that even in Nifty at this point in time, the price is somewhere here. And you can see there is no zigzag caution on top. There is no long signal edge point. Even in intra-week, there is no zigzag or long signal edge point. Now, first thing, when you're looking for a zigzag or a long signal edge point, do check intraday 3 long, and you also check intra-week, because if there is a zigzag or a long signal edge point in any one of these two, then you can avoid the trade. If there is nothing like that, then you can go ahead and do the trade. Got it? So this is what we do here. In this case, there was no zigzag, no long signal edge point. So that is the reason we went ahead. We did the trade in Bank Nifty yesterday. We bought a call option. And today during the live market session, now a couple of the traders have members who are already using Dynamic Live. they had shared their experience stories, wherein an individual has bought it at 165 rupees premium call option, and today he is able to exit at 210 rupees. There is someone else who has also made very good profit, who have shared their experience during the live market session. So when you start implementing the second step, what will happen is, in comparison to the first step, the number of trades will reduce in the second step. It is because when you avoid certain trades, then you will see that most of those trades which you have avoided eventually would have ended up being a minus trade. But since you have avoided it, you have successfully avoided a minus trade. So since the number of minus trade comes down, then what will happen is automatically the balance will increase. Your your profits and the returns will also increase. So if anyone can implement the second step mechanically, then we expect you to earn a minimum of 20 to 25% returns at least per month. The first step, remember, it fetched you only 10 to 15% minimum returns, and you know that this 10-15% minimum return is not a small return, it is a massive return. And there is a minimum. There are months where you can get more also, but then as you move on to the second step, the returns will increase as we check before we do the trade. So by checking, we are able to decide very easily whether to do this trade or not to do this trade. Now over a period of once even this step 2 also becomes very easy, and earning 20-25% returns also becomes habit. Now in this case, now you can go learn the third step, which is very easy if you have understood the second step clearly. So all that we do in the third step here is, whenever the action tells us to buy a call option or a put option, before we do the trade, we check intraday 3 long, we check intra-week long, we check one more thing, that is the third one, and that is dynamic system. Give me a second. Now what is dynamic system? Dynamic system is also an intelligent software like Dynamic Live. It helps us do some amazing positional trading. Now how to do positional trading using dynamic system? There is a very clearly defined method. We call it as dynamic system level 2 trading method. So as per that method, now what is the current position? Are you supposed to be holding a long position, or are you supposed to be holding a short position? This is what you are supposed to check. So yesterday at this point, or today at this point, when it said buy put option, now we checked ID3 long, it was red in color, it was supporting. We checked intra-week long, it was also red in color, that was also supporting. But then when we checked the dynamic system level 2 trading method, as per that also we were holding a short position. So since all three of them are pointing downward, now what you can do is you can simply go ahead and do the trade. No thinking, no guessing, just do the trade. But this is the case where it said buy call option. Now when it said buy call option, we saw that intraday 3 long signal was against, and intra-week long signal was also against. And when you check the dynamic system level 2 trading method, as per that we are still supposed to be holding on to a short position. So all three of them are pointing down. You're planning to buy a call option. You're trying to go against the trend. So most of the trades that when you go against this trend now, you will see that you will start witnessing some minus trades here. But then this is what we are supposed to do. So since all three of them are pointing downward, and since the action is telling us to buy a call option on this particular at this particular time, now we check the Tenkai signal. Whenever your trade is against the trend, don't forget to check the Tenkai signal. So when we check the Tenkai signal, we saw that now in Nifty there is no long signal edge point, there is no zigzag. We saw it just some time back. Since there is nothing, we went ahead and we did the trade, and we got a good exit today morning. But then I'm sorry for the interruption here. So as I was telling you, whenever the trade is against all these three, or even if it is against any one of these three, either intraday 3 long or intra-week long or dynamic system level 2, any one of these three is against, then you have to check the Tenkai signal before you do the trade. And if there is any zigzag or long signal edge point, then you can avoid the trade. If there is nothing, then you can go ahead and do the trade. Got it? So the process when you're trading in Bank Nifty, going and checking Nifty to take a decision whether to do this trade or not to do this trade, this process we call it as Tenkai signal. Got it? So similarly, if you're trading in Nifty, then Bank Nifty will act as your Tenkai signal here. So this is how you trade as per the third step. So when you're trading as per the third step, now what will happen here is you will see that compared to the first and second step, the number of minus trades will drastically come down in this third step, and the returns will increase. So if anyone can implement this third step mechanically for one entire month, we expect you to earn a minimum of at least 30 to 40% returns at least per month. There are months where it has given more returns also, but then at least minimum this much can be earned if you can implement it mechanically. Got it? So this is about the third step. Now in order to complete this third step, there is one last point that I would like to convey. For that, I'll have to open the dynamic system. So let me open dynamic system, and in the meantime, if anyone has any other questions or doubts, you can ask me right now. So this dynamic system here, in this dynamic system, you can see I've opened a daily chart of Nifty. How to open a chart of dynamic system, what is there inside dynamic system, how to use it, all these things. There are training videos in the members area. Now where to find it, I will show you at the end now, and at your leisure time you can go watch it to understand the dynamic system level 2 trading method also. Once you have understood that, then implementing this third step using dynamic live becomes very easy. Got it? So there's a price movement in the daily chart of Nifty. So along with the price movement, there are three lines you can see here. One is a black line, we call it as P trend. The second one is a green line, we call it as mid trend. The third one is a purple line, we call it as long trend. So whenever the price is trading above all three trends, it means it is in a clear uptrend. Similarly, whenever the price is trading below all three trends, it means it is in a clear downtrend. Okay, so just by looking at this, you will be able to understand whether it is in a clear uptrend or in a downtrend. But there are times where the price trades between the three lines. So whenever the price trades between the three lines, three trends, now this is a point where this is a phase of the market. We call it as in between market. We call it as in between price movement. So whichever stock or index that you are planning to trade, and if it is an in between trend as per dynamic system daily chart, then whatever trade opportunity that you get here in this dynamic live, for every trade you must check the Tenkai signal. Got it? Now what do we check in Tenkai signal? Only two things once again. Is there a zigzag or is there a long signal edge point? If any one of these two is there, then avoid the trade. If there is nothing, then go ahead and do the trade. Got it? So this is all about today's session, gentlemen. If you have any questions or doubts, you can ask me. Now, before I end it, let me also show that way to find the members area training videos. Now, in the meantime, Mr. Kruth has asked, sir, as per dynamic superpower trading in Sun Pharma, sharp action or wait for better confirmation? So let us check Sun Pharma here. I'm just trying to add it as per the 1, 2, 3 easy steps. Now, since there is a weekly caution, you have to wait for a better confirmation, Kruth, because there is a major caution on top from where it is coming down. And now even if there is a weekly caution at the bottom, you still have to wait for a better confirmation. But then these are the points where you can secure your profit by shifting over. So let us go check the official website, that is dynamiclive.in. So this is dynamiclive.in. In the menu, you can see here there is this members area. Just click on it. Once you click on this members area, now what will happen here is it will ask you for your email ID and password. Whenever you subscribe for Dynamic Live, you will be given a password to log into this members area, and you get a lifetime access. And then in the menu, once again, there is this training 2020. Just click on it. Now these are all the reference videos that I was talking about. So if anyone is a hardcore, if anyone is very new to dynamic system, and if you want to learn about dynamic system from scratch, then I would like to tell you that first watch this video, that is dynamic system basic navigation. How to open a chart, how to open a report, where to find what, and what is there inside dynamic system. As all these details will be very clearly explained here in this video. And then scroll it down a bit further, and you can see here there is this dynamic system level 2 trading method which I was talking about. There is a positional trading method which we will keep comparing in order to decide whether to check the Tenkai signal or not when we are trading as per the third step that we discussed today. Before you watch this level 2, watch the level 1 trading method first, and then you can come and watch the level 2. Then only then it becomes very easy for you to understand. Got it? So this is about dynamic system. And then if you can scroll it down a bit further, there are a lot of other reference videos which can help you understand things even better. Now for that, there is one video that I would like you people to watch, that is options trading and money management. So how to select the right strike price, how to shift over to secure your profits, how to do money management in options. All these things are very clearly explained in this video. And then all these videos are already there in 4 different languages, so you can go watch it at your leisure time. And then we have the Daumantic method, the first step that we discussed, which can help us fetch around a minimum of 10 to 15% returns. Now that is this method explained in the video. And then at last we have the Daumantic method and Tenkai signals. Now in this video, the second and third step that we discussed today is explained very clearly. And as I was telling you, if you're trading in Bank Nifty, then Nifty will act as your Tenkai signal. If you're trading in Nifty, then Bank Nifty will act as your Tenkai signal. But if you're trading in any stock, then which is the Tenkai signal? How do you check? Where to go find it? Now all these details are very clearly explained in this video. Got it? So these are all the training videos that you can go through. So this is all about today's session, gentlemen. If you have any other questions or doubts, you can ask me now. If there are no doubts, then you can text me saying that there are no doubts. Mr. Karthik, Bank Nifty as per dynamic superpower trading from yesterday. Now we discussed this in the pre-market session. We were holding on to a short position. Now, if anyone missed it, then today morning they would have exited long and got into a short position. So you would have held on to your short. But as the price came down, as it came closer to the mid-signal edge point with zigzags, those are the points you can exit the trade, just because in Nifty it is in sideways. It is at a long signal edge point. You would have exited short and got into a long there because it is in sideways. And if you're taking a long in Nifty, then if you're having a short in Bank Nifty, and if it has reached a good point to secure your profits, then it's better to exit the trade completely. Yes, Kruth, you can definitely do that. That's what I was explaining now. So this is a case of Bank Nifty here. Yesterday we could have held on to short position, but then we had bought a call option, that is took it long. But then here there was a long signal edge point preparation. But then if anyone did not notice it, then you would have held on to your call option. And today morning at this long signal edge point, you could have exited long and got into a short trade. Now after getting on to a short trade, the price has managed to come down. And as it started coming down, when you go check it in the spread view, you can see that there is a mid-signal edge point here. So considering that, one could have thought about an exit. It is also supported by a tiny caution here. So this is the thing, and moreover, it is in sideways as far as intraday 3 is concerned. Any other questions or doubts? All right, looks like there are no doubts. So gentlemen, thank you all for joining today's session. Wish you all a happy trading and a very good evening. See you on the other side in the pre-market session. Until then, good evening to all of you, and thank you once again for joining the session.